And we are now recording.
Alrighty, awesome.
Well, you want me to do an introduction?
No, we did. It's fine.
Allie, go ahead. All right.
Hi, everyone. I hope you're having a wonderful day today. My name is Bryn McKinney. I'm representing PNC Bank. I also have Veronica Merrily here, who is also representing PNC Bank. We're going to introduce you to some fundamentals that you can kind of put together about budgeting, things that are just going on, some tips and tricks. And we're just going to kind of walk through this slideshow and talk to you about anything that you might have or any questions. We have one person here, which is lovely. We'll take that.
Did you sign in for us as well?
Yes.
Cool.
Yes, thank you. Awesome. Okay. So,
Well, thank you so much for being here, everyone, and who is just logged in. Thank you so much for being here. We appreciate it. So like Bryn said, we're coming from PNC Bank, which is a bank that was initiated originally on the East Coast. And then we're here for the marketing expansion because we are moving a little forward. We actually moved all the way to the west now. So this is a great opportunity for us to introduce to you what we are about. We are an exceptional bank. I had the great opportunity to start as a customer. And then because when I saw the bank, it brought me to want to work for this bank because it was all about customer service. It was incredible. So that's my personal experience. So coming from a client, I became an employee. So we're just gonna, like Bryn mentioned before, we're gonna talk to you guys a little bit about some financials that are gonna be able to help you in your everyday life. So we're gonna start with the introduction a little bit. So that's what we're talking about, us here in the market and everything. So I'm gonna ask you a question. This is very interesting, and not everybody knows about this information, but what percentage of all US citizens and adults do you think don't plan for a budget at all? Just throw a number, a thought, and you're gonna be a little bit surprised. What do you think?
Maybe like 40%.
That's pretty good.
Oh,
That's
yeah.
pretty good.
Yeah.
All right. Well,
38% actually.
so you're right on. So this is amazing. This is an eye opener to be able to see that a lot of the people just don't plan for a budget at all. And as you can see, unfortunately, with this pandemic that just happened, we saw a lot of people getting in trouble because they didn't have a budget, because they didn't have a plan. So that's what we're here for you guys. So when a situation like this happens, it could happen as we could see. So we're here to be able to be ready for you guys, to be able to help you prepare for an emergency like this, and to be able to give you all the tools that we have to offer for you guys. So now we're going to talk to you guys about managing your budget. So we have some tips here for you. So what is it important? What do you think is important for you guys to manage your budget? Hi, welcome. Thank you so much for coming. So, as you can see here, it helps you to plan for covering all your expenses. Again, thank you so much, Jamie. It helps you a lot to cover all your expenses because sometimes things happen or we get unexpected things that come to our life in terms of financials or anything like an emergency. So it is very important to also have a plan to be able to cover all your expenses. Is super, super important. And of course, makes it much easier to pay down your longer term debt. So the good thing about us, PNC, is that we're a full financial institution. So we have every single solution for you guys to be able to help you with that. We arrange it every single thing that we can help you guys. So again, we have some plans to share with you to be able to pay off your debt and to even consolidate some of your debt because sometimes people have things here. So to create a little more organized life for you guys, we're able to have the tools to offer to you, all of you, to be able to have a plan and solutions so you can maybe consolidate all those debt that you have elsewhere in just one place to make just one payment. Or we have many solutions. So if you have credit cards that are really, like they have a lot of balances, we can probably just bring them here, one of our credit cards, to be able to consolidate. Like I said, we have a lot of solutions for you. And then enables more disciplined savings for future financial goals. This is also very, very important because, again, a lot of people are not prepared. And this is very important to show you what the solutions we have in order for you guys to be able to have more savings for the financial financial goals that you may have. Because you're young right now, but believe me, like happens in a blink of an eye. Yesterday I was 16 years old, so then I'm just a little bit older.
And
Not much.
And when you have a budget, it helps you get to your goals, like,
Exactly.
such as buying a house, starting a business,
Mhm.
all of those types of things. Any type of goal that you have, when you have a budget, it's kind of like you're operating as a business, but on your personal finances as well.
Exactly right. Yeah, exactly right.
So,
Thank you so much.
yeah. Andrew.
And then, for example, you may find you may want to find the format that you like, that works better for you. There's many ways that you can do. Like for example, like one examples we were talking about a little bit earlier. Like what examples that we're talking about?
Oh, so for instance, like, so find a format you like, such as, do you like to use Credit Karma, where you can kind of track what type of debt you've got,
Mhm.
how, like, what type of, how much should you pay down to get your credit score up? What also, you could also utilize calendar. Do you like to write things down, or do you like things to be more of a virtual setting? So, making sure that you're putting on your calendar different types of, oh, my car payment's coming out this time, or my house payment is coming out this time. And then also giving yourself that time and flexibility, because just building a budget doesn't happen overnight.
Right.
Like, it's something that will take some time, and you're going to have to learn with it too. When do you get paid? What should I pay next? How does that look? What does that look like? So make sure you start your plan, but you can always go to Google and put in, how do I start a budget? And you'll get all kinds of just different ideas of how you can start getting yourself into that mindset of, okay, I really need to budget myself. I only want to spend $100 on going out to eat this month. So you can start putting those things into place and practicing, because you can talk about a budget all you want, but if you don't start practicing it, it will never happen.
Right. And then we have and thank you so much, Brit.
Yeah.
And also in our website, or you're gonna find a little bit more of that information as well. And then once you enroll with us, whenever you enroll to online banking, we also have a way to show you how you can budget using the tools that we provide to you once you become part of us, our family.
We do, yeah, we do have those budgeting tools.
Yeah.
So a lot of times young professionals, how they manage their budget is 70% of their income goes to living expenses. 20% goes to the buffer fund, so you're like tired. And then 10% of the income is long-term savings. So, and as you go up in age, these might be different. They might look different. If you get married, your household budget becomes the budget. It might not just be one person. It might be you and your husband, or you and your spouse, whatever. So that's kind of like how it is right now. It's kind of how, like, from ages 22 to 27, this is typically what it looks like. The 70-20-10 budget is what they call it.
Exactly. And again, like Brit says, it can change depending upon each person, but it's always good to have an eye on this as well.
So next we're going to move towards that saving towards your goals, and what does that look like?
In the chat, some styles we've seen are ledgers. So John mentions he keeps a ledger of everything.
Awesome.
Oh, great.
Lovely. Yeah, ledger is great.
Good job, John.
Yeah.
You're on the right track. Very good. All right, so here we're going to talk about savings towards your goals and automate your savings. Again, have money you allocate for savings deposited directly from your paycheck, so you aren't tempted to spend it. This is very important because there's a lot of people that don't really plan, and they say, okay, I get my paycheck, oh, but I want to get these shoes, and I want to get this, and I want to get that, boom, in a split of a second, everything is gone. So we have the good news about PNC, we have the tools to show you how you can actually do that. We can either show you the different kind of accounts that we offer, and then with those accounts, you're able to have that opportunity to put some money on the side. We have many solutions. One of them we have is a virtual wallet. That's one of the kinds that basically what it helps you, that whenever you get your paycheck on your primary checking account, you're able to then program it every single month to be able to have some amount of that go to short-term savings that we offer. And then you can also split it to a long-term savings. So that way you're going to be able to start saving. And then once you have an opportunity to say, okay, now I want to get this, and then have you dreaming of getting a car or something, then you have the tools to be able to go ahead and say, okay, now I have the budget to get a car. Whenever you buy a car, don't think that you have to have the 15,000 whatever. No, you can have the down payment, and then you can plan ahead and say, okay, I have already the money for that. Hey, let's do it. But we help you to do that as well.
And this is exactly right. So paying yourself, because when you do this, you're paying yourself, because in the long run, you might need to tap into those extra funds. And when you have those extra funds,
Yeah.
you'll be able to buy the car you want or get into that house you need. But if you put it away, you don't see it. So you're not tempted to use it on your everyday expenses. It's for an emergency. And yeah, it's right. You're paying yourself first. So whoever had said that, that's exactly the concept.
That's perfect.
Yeah.
Yep, love it.
Very, very good. Excellent. So far, do you guys have any question? You're good? Yeah? Okay, if you have any questions, please feel free to just chat here with us, and we'll be very glad to address any of the questions that you may have. Okay, now we're gonna go with savings toward your goals for every stage of your financial journey. So one, short-term emergency fund, car, home repairs, a vet visit for a sick pet, etc. Again, we normally don't think about these things. We're like just going every day, and we go and we just don't think about these things, but these things happen. There are emergencies that can happen in a split of a second. And they were like, oh no, I'm not prepared for that. Just imagine, like, winter is a very, very, very cold day, cold night, and boom, your furnace goes bad. What do you do?
Yeah.
What do you do?
Yeah.
So those are the things that we're gonna help you to help and address them. So you are much better prepared for short-term emergency funds. And so we're here for you. Buffer. Fund middle-term savings, safety for vacation, house down payment, or if you find yourself out of work. And we are going to show you all the different options that we have for you. Again, this what I was talking about a little earlier about the budgeting, and be able to help you to allocate some of those funds into different accounts are going to be able to help you with this. And not only that, but like I said, we're a full financial institution. So we not only have the solutions in the checking accounts, savings accounts, we also have partners that we work with. They're going to be able to help us working side by side to be able to help you allocate some of those funds into different opportunities to be able to have either probably a better interest rate, something that's going to give you a little more money to be able to help, like for a house down payment or something. We have,
Or even for retirement and college funds.
yes, the number three,
For a child.
savings. For sure. So we have all the solutions for you. Again, you're very young right now, but believe me, life happens very fast. And the moment you least expect it, you're gonna come through all these things.
Yeah, so savings toward your goals, retirement, and savings example. So a lot of times people don't think that, oh, hey, I'm finding an employer, I'm starting to work over here. They don't really provide me too many benefits, but I like the salary, so I'm gonna go for it. Really, you gotta be really open-minded, and you want well-rounded companies to work for, because you wanna be able to have someone who offers you a retirement savings plan, who offers you insurance, who offers you those different benefits. It's something that's very, very important that you don't think of right now. But whenever you're 65, 70 years old, you're going to really start thinking about it, because you're going to be like, oh my goodness, I didn't start a retirement fund. I've only saved for myself, by paying myself, but really having that money grow, this is the best way and the best tool to use is that retirement. So even though, we're here talking about budgeting and what that looks like, also setting yourself up for success with the company. Join a company that you like, that you enjoy, and that offers you these types of benefits, because it's very, very important as you grow older. It's something to start now. I have worked with PNC for 10 years. I started my retirement plan at the age of 22, and I am so happy to see what it looks like at this stage of my life. And every paycheck I'm putting in about $170, and then PNC, what they do is they match my amount. So I'm getting double of that every time I get paid, basically. Yeah, go ahead.
So is that basically the 401k plan?
Yes, that is the 401k plan. And that is only offered through employers. It's not something that you can go to an investment person and say, hey, I want a 401k. They can give you other types of vehicles But 401k specifically is offered through employers only.
So if I have my own company,
Mhm.
there's no way that I can do that for myself.
It's a little different. So you would work with an investment person, and if you have your own company and own business, they can create a plan for you specifically. And say you have employees, you can also start a plan for them too. But that's different because you have like an LLC or a company, you can create a 401k plan. But me just being myself, just, working somewhere but not getting those benefits, no, I wouldn't technically have the ability to be into a 401k plan. But that's a really great question, and there are definitely options for you. And it's absolutely something you'd want to start, because I feel like those are also different types of write-offs that you can look at taxes as well. Of course, you want to talk to your accountant, but that's always just something to think about too.
Thank you.
Yeah, great
Good
question.
question, Hannah.
Yeah.
I just saw your question. Yes. So if you change of employer, your 401k, the one you had before your prior employer, you can always request to roll it over to the new employer. So yes, that's a good question. Thank you so much, Hannah. Yeah, you can do that for sure. Okay, there you go.
Actually, you want to do that. You want to.
Yeah,
make sure
you
do.
want to do that. Yeah,
Yeah.
you don't want them just to keep your 401k, because of course, you're not producing. So whenever you bring it to the actual company you're working, every time you get paid, you get that benefit as well. So this is an eye opener, as you can see. So this is start saving at a very young age. Look at the difference you will have just by saving this every month until you're 65 years old. So just look at the huge difference of starting here at a very young age. So you guys are in.
And 25 is a good age to even start that process, really.
Yeah.
Yeah.
Yeah, absolutely. If you guys are already working at your age, you're very young, by all means. I mean, you may not be able to save 200, but save $50, $100, whatever you can afford, so put it away. And you're gonna be very surprised how much you're gonna be earning, like in the future, in the near future. So it's an eye opener for sure. And then so maxed out contributions to take advantage of the matching forward. That's what that Bring was talking about. Yeah.
And this was a huge one too. You want to avoid withdrawing from your 401k.
Yes.
Reason being, there's tax implications. You're going to pay more on that money, a lot more actually. I would say with your employer, instead of doing a withdrawal option, a lot of times there's a loan option that you're able to loan against that 401k. That is the much more safer, cheaper way to do it, especially if you're in that pinch and you need to grab those funds or need that for something. I do know that also sometimes, like for instance, even at PNC as an employer, they say you need a down payment for a mortgage. You're able to borrow against your 401k. Now it does hurt you, but it's not as bad as a withdrawal. Just putting that out there.
Yep, absolutely. So far, guys, does anybody have any questions that we can address so far?
Because we're going to go into the next one, which is understanding credit, which I know this is always a hot topic.
We have a question in the chat.
Sure.
What is the difference between traditional and Roth IRA?
Oh,
That's a very good question. It has to do with tax.
Yep. Yep.
So can you expand a little bit?
Sure. So it has to do with tax. So traditional, you basically are taxed after you would take the funds out. So you say you start saving, you become 65 years old. Then at 65 years, so say that's 2065, 2065. What does taxes look like then? That's how you would get taxed, like with the amount that you take out on that traditional side. Roth IRA is actually you tax the money before you put it into that investment vehicle. So you tax it on today's tax. So then it's already been taxed. So once you go to withdraw it when you're 65, 70 years old, you're not going to get second tax. You've already been taxed on it. So that's the difference between traditional and Roth.
So basically, Roth is like more real time. In other words. Yeah.
So basically, nowadays, the way taxes, maybe you would want to do Roth as opposed to traditional because we don't know what the future holds.
Exactly.
But it really kind of goes back to you. And I always check the trends. Looking at trends will help you decide which one is best for you to do.
Yeah. Thank you so much for that question. Perfect question. And then we're going to explain to you what is understanding your credit. So always borrow with a clear purpose to improve your overall financial well-being. and then a clear plan to pay back what you owe. Sorry, I was reading that this.
Yeah.
That's true.
That's a question. Okay, so this is very, very important. So just not borrow just because you want. I mean, you always have to have a purpose and a plan, because of course, whatever you borrow, you're gonna have to pay back.
But you have to pay back with interest.
Exactly.
A lot of times, so that's that kicker.
Exactly right. Yeah. So just be smart about this. I mean, for example, like if you do request a loan and stuff, just be mindful of this. That after all, it is you're gonna have to pay the money back with a loan. So just in a really good budget planning, you have our recommendation as PSC is for you to just request whatever you really request at that moment. Yes, always borrow with a purpose.
Yeah.
That is
Jamie.
I was like, I'm playing in the chat.
Love it.
So yes, just with a purpose.
So then,
And if number one, loan forgiveness is available, but few people qualify.
so this is for the student loans, and that's true. Like,
Yes.
this is something to always think about too.
Yep, exactly right. And then there are many refinancing options that can reduce interest and the amount you owe. So yes, I mean, for example, if you have already like a loan somewhere, you should always go into the market and just try to have different options to see what it will be better for you. Because even if you apply for a loan and you say you have 12%, just to give you an example, but then as you are making your payments in order and everything, you have a very good credit history, you may be able to qualify then to refinance those loans and to be able to qualify for a lower interest rate. So therefore your payments are going to be lower. And of course, it's going to help your credit to grow even higher, because obviously the people that are behind this scenario, they're called underwriters. And the underwriters, they always love to see that you are responsible, you're making your payments on time. So therefore your credit score keeps increasing. So therefore they're going to feel more comfortable to be able to lend you more in the future, cars, houses, whatever, because it's all connected. So if you're really responsible for your budgeting, your payments, chances are you're going to be all set very good from the very beginning. No problems at all. And some federal loan borrowers are eligible for income-driven repayment plans. Yeah.
Yeah, for student loans. Yeah.
For student loans.
Yeah.
And automate your payments. This is important too.
Student loans are tricky. So with student loans, you want to make sure, so for instance, certain government student loans are not on a fixed rate. Okay, so they either go up or they go down with the market. So once you are out of school, you've graduated, and after that 6 months, then you start seeing your loan repayment. That's how it happens. What you want to do is you want to take any type of student loan you have, look at what the rate that they're providing you, and then start maybe talking to different institutions about getting on a fixed rate. Now, maybe your income is as a lower income where you can qualify for a different type of repayment plan, but that's not always the case. So you really want to make sure and ask those questions to your current loan provider, if it's through the government or whatever, what that looks like and how you can be eligible. And if you're not, then you definitely want to move that rate that fluctuates to a fixed rate student loan, because then your payment will be the same every time. You won't have any surprises. And you'll also have a time frame of when that will be paid off and down and gone. So just something to look at and something to, make sure that you're double checking and understanding what you are currently in. So just thought of that.
And like Jamie says, don't be afraid of asking those questions, because after all, you have to think what is best for you. After all, this is going to affect you and your future. So don't be afraid of asking all these questions.
So this is a big one right here.
Yes. So understanding your credit debt as an investment. Yes. Good debt is a debt that provides a potential return on your investment, a student loan, mortgages, small business loan. And a bad debt, it doesn't provide a financial return, but managing it successfully does contribute to your ability to access future credit, like credit cards, payday loans, and so forth.
Any questions on this? Okay.
It helps a lot, but you have to be more responsible.
Basically. Basically. A little bit, Veronica. That was good insight. All right, so I'm going to move on here. Understanding credit. Dues for building a strong credit score.
Right. So one, use credit cards and pay balances off monthly. A lot of people like use their credit cards and they say, oh, I'm just gonna make the minimum payment, or I'm just gonna, or maybe I'm gonna skip this payment this day, and then I'm just gonna pay the late fee. This affects you tremendously. I mean, people don't realize how much this affects you. We were talking about earlier about building your credit score. So this is gonna take you way down. So it's always very important whenever you're eligible to be able to have a credit card. I said, every time you make the payments and you make them on time and pay the full balance that you have, preferably, this is what the underwriters love to see, for you guys to be able to be responsible and make your payments on time and everything. This is huge, and they pay a lot of attention on this. Get a loan for a larger purchase. And again, if you're like trying to get a car, for example, you can always request a car loan, and then as long as you have the payments on time and everything and be responsible, of course, this is going to help you tremendously to build your credits. This is huge. So they like to see movement. I mean, if you have just something you don't do anything. Sorry, no, you're fine. And if you don't do anything, how are you going to build your credit? So they like to see movement. They like to see you like doing this and spending and lending and spending and paying. And so it's just a cycle for them to see, to be able to feel more confident in the future, to be able to give
So does it affect me if I have like several credit cards and I don't really use them?
No, actually, if you have their zero balance.
Yeah, I mean, like, let's say I have a Lowe's, a credit card, Home Depot, maybe American Furniture.
Okay.
And of the three, I only use one often. The other two,
Are they paid off?
Yeah, paid off. And
You're
everything.
good. You're good. As long as you are like the problem will be like you have all your credit all the way to the top in your credit cards and you're struggling to make your payments, then that will be hurting your credit. But as long as you have the other two paid off.
And do not close them.
Exactly.
Because that's part of your history.
Okay, that's
Yeah.
what I was gonna ask. Should I keep
I was
them
gonna
or
say
should I just?
Just put them away for a rainy day.
Exactly right. That is very
Because,
important.
if they're paid off, I would just put them away for a rainy day. And you never want to close them because once you close them, then that history that you have with them is no longer,
Oh.
with you. So that's kind of like gotta play the game.
Yes.
And that's one of them.
And not
you know?
everybody knows that. Because
I have
I'm just gonna
store
close my
credit card
credit
like
card.
that.
Yeah.
Yeah, I have a store credit card like that, so I'll go and buy like one thing, pay that off because I could pay for it with my regular paycheck, and then I stow it away for the next year,
Yep.
just to maintain that history.
Exactly right.
Yeah.
Yeah, exactly.
Yeah.
Yeah, absolutely,
Absolutely.
Very
absolutely.
good question, Lucille.
Because length of time, especially for a business, is huge. We like to see a length of time for credit usage whenever we're like giving a business loan or doing a business credit card or something on that end.
Yeah, I don't have a business yet, but it's in my plans to
Yeah.
open my own business.
So when you personally, you are the business, so they will always view like both of them together. So your personal will always follow you and be something for that business. So you always like, if you want to start into that business, you definitely want to, make sure that your personal credit is in a good spot too.
Sure, good information.
Oh, yeah, absolutely.
Also, be mindful to some credit cards. So can I say, they also have like the year that they have a yearly fee. So just be mindful that the kind of credit that you don't have, they don't have that fee. Otherwise, just always pay it, even if you don't use it. Right.
Can credit cards, can they close your account if you don't use it for a long time? Like, let's say your balance is on zero and you just don't use the card for like 3 years, can they just close your account?
They can, yes. It will not harm you though, because that history will still stay with you because you didn't close it because the company itself decided to close it down.
Exactly.
So yes, but they can do that, but it won't hurt you.
Yeah, because you didn't call and take the initiative to close it.
We have 2 comments in the chat. So Seneca currently has a credit card for just her Spotify, gas spending, and kind of subscriptions. She pays that off every month,
Nice,
just to maintain those small expenses.
awesome.
And then Rosa is asking about, I know some credit cards have an end if you don't use it by X amount of time. How often should we be using our cards?
That's a great question. I would say you would probably every 6 months, if you haven't used that card, I would use that card if you want to keep it open.
You see, with a little purchase that will activate it
Yep.
and the whole process, and
Yep.
you should be able to keep it open.
Hannah said, I just got my first credit card about 6 months ago. How long does it take to establish a credit score from scratch?
Okay, that's a very good question. Great. So again, this is what we mentioned before, in this part over here, is now that you have your credit card, it's very important that you pay it off every single month. Pay it off. I would recommend, a year after having the credit card, just be checking and mindful in Credit Karma, whatever system that you use, to always check what is your score, how it's increasing and everything. And then, but every time you would like to get like a line increase, like if you want to get, like, say, right now you have $2,000 credit limit, like if you want to increase it, that can happen every 6 months. So every 6 months, we can check that to see if we can increase the line. But in order for you to be able to get accepted into that, or the underwriters feel comfortable for you to be able to have an increase in your line, it's always very important that you pay them all the whatever you owe every single month in a full, the full amount. That is very important for you to do that, so you can achieve a better.
Thank you for a credit limit increase hurt your score.
I'm so sorry.
Does asking for a credit limit increase hurt your score if you get accepted either way?
It doesn't technically hurt your score, but it will, like, you probably have 1 or 2 points down because you did a credit inquiry.
Exactly.
Every year, you can have about 5 to 7 credit inquiries. And it takes about 2 years for a credit inquiry to drop off.
Mhm.
So for instance, if a credit inquiry is not Comcast or Verizon trying to see if you need to put the deposit down to get their service. A credit inquiry is a car loan, a home loan, a credit card, any type of new type of credit vehicle, not Comcast, not Verizon. So just, think of that, because I know sometimes people are like, oh, well, I don't want them to pull my score. And then that's an inquiry. That won't be. It's a soft pull, so that will not help you. It's the hard pulls that will act as the inquiry. Yeah.
I hear people saying that the more you check your score, it affects your credit. Is that
That's not true. You can check your score all the time, anytime you want. However, with the credit bureaus, there's 3 credit bureaus. You are able to get 1 free official credit bureau each year. So every year you can get a free score, but these scores are not like Credit Karma. Credit Karma is always like updating and showing you what it is. It's more so like, it's very technical. It's definitely something like, for instance, say an employer wanted to check your credit. It's that type of credit pull that you would receive from the bureaus. It's real time, it's real life, it's everything that you've ever done, ever. Say even a payday loan, that would show up on that, so like that's what that type is. And you can strategically do it. You could pull from Equifax, TransUnion, and then what's the third one?
TransUnion, Equifax, and
Equate? There's a third one.
Yeah,
And unfortunately, I just know we use Equifax and TransUnion, so that's like what I go with. But you could strategically every 4 months, you could pull one from, the one, and then one from the other, and then one from the other. But if you download Credit Karma, which is an application, you can always look at that. That will not hurt your score.
Experian.
We have a question, Experian, yes.
Yeah.
We have a question in the chat. I heard that because of the pandemic, you can now check your credit weekly up until April 2022.
That is true. That is true. That is a new thing, and that is true.
Yep.
But old school rules, which is probably going back to that soon, well, in April 2022, then it's once a year. You don't have to pay for it. It's free. You can always check it as many times as you want. You just may have to pay for it.
Right.
Yeah.
Exactly right.
Oh, he's got another question.
Sure, absolutely.
Yeah.
Seneca.
Cheat sheet. It's all right.
Oh, can you hear me, guys?
I just saw Williams.
Mhm.
Go ahead, Seneca, if you want to unmute yourself or ask in the chat, either one works for us.
Can you hear me?
Maybe she's typing.
We can't hear her. Try again.
Can you hear me?
It's very faint.
Ah.
There it is. You're there.
Okay. Okay, so you can hear me okay, right? Okay. So I see that, you were getting to the topic of Credit Karma. I was gonna ask because I know there's a lot of conflicting information, like when you go to apply for like an auto loan, they check like your Vantage credit, like things like that. And then my question is why, so I use Credit Karma, and on the TransUnion side, it shows like my score, and then on the other side, it shows like a different score. Is it like, because only certain, I guess, companies report to certain credit bureaus, and that's why there's different like conflicting information? I don't know, because I do plan to apply for auto loan later this year, and I was talking with someone, and they said that they use the Vantage credit score, but there's just so many. I have like 3 different scores through different credit bureaus, so I don't know which is the actual, like my FICO score or whatever. So yeah.
Yeah,
Yeah,
that's a
actually-
great question,
Yes.
because that is so confusing. The FICO score is what banks use, the FICO score. So Credit Karma will always be a little bit different and off because it's not a credit bureau. Yes, they're receiving the information from the credit bureaus, but it's not always up to date, and sometimes it takes them like months to actually get what you may have paid off. So that's why you're seeing, that fluctuation, that variance. I would always go with your FICO score. That is the one, but I will tell you, banks use about 10 different scales of scores. So I would always rule of thumb is FICO is like number 1, but there are about like 10 to 12 different types of scoring models. And it really all kind of depends on that type of loan you're getting. Auto, installment loan, line of credit, mortgage, they all kind of use a variance of different types of scoring methods. So
Absolutely. Yeah.
does that make
Good
sense?
question.
Yeah.
And then
Oh, that
we
makes a lot of sense. Thank you.
Yeah.
Thank you. We also offer here at PNCs that once you roll with us and you have online banking, and then if you have a credit card with us, we offer that service free. So in our online banking, whenever you log in, you're gonna be able to see always your FICO score, and that's for free. That's a free service that we offer. And then, right?
Sorry.
Is it?
Oh, okay. I didn't know if I came through.
Yeah, for sure. Thank you. Okay, perfect. And then, so understand the credit loans to build a strong credit score. So yes, like to your point, like if you request a lot, or you apply for a lot of credit cards and loans and everything, that of course is going to hit your credit if you do it at once. And then we're talking about that earlier. Do not close your credit cards. That really, people don't realize that. Say, oh, I want to consolidate. I'm just going to close my credit cards. No, that hurts you.
So even if it's a store credit
Yes.
card,
Keep it,
Yes, always. Even if it's a store.
just pay those off because those store credit interest rates are extreme.
Yes.
They're like 25%. So yeah,
26.
yeah, exactly.
You say you have a home
Home Depot and Lowe's,
those are like 25%.
exactly, 25.99 or something, so 26.
Yeah, exactly. If you had some like balance with those, we always recommend to bring the balance to a much lower interest credit card, and then you can just sometimes you have 15 months no interest, so you can pay it off much faster. So we offer the services too. Yes, that's amazing to just get rid of that debt and much faster. And then of course, I'll extend yourself with credit. They don't like to see that as well.
Well, I feel like this kind of goes with also living within your means, like understand, and that goes back to budgeting, understand what can you afford. So yeah, you might like that Mercedes or that BMW, but maybe it makes more sense economically for yourself, for you to get ahead in the long run, to go with that Chevy or that Ford or whatever, you know what I mean? So always keep that in mind too.
Yeah, it's very important. Yep, absolutely. All right, and then protect your finances. So proactively protect your finances by safeguarding personal data. Identity theft can lead to strangers opening credits in your name or withdrawing funds from your checking and savings accounts. This is super important, guys. We just sometimes we don't pay attention to this, and then once like your identity is stolen, just imagine what people can do with your information. So it's very, very important to always safeguard it. To make sure that you have, for example, like I have a system where it tells me every single time that every time my credit score gets used, it tells me, I get an alert, stuff like
Yeah.
that. So we get those. And then, so it's always very, very important to have some second security because again, once your information is compromised, it is a problem because then you have to change many things. You have to it's just a mess. You can become really, really, really messy.
You want to just stay present with your finances. You want to log into your online banking. You want to make sure you're checking your credit score. You want to make sure if you see something, you need to call a credit bureau. You need to call your bank. That's what you need to do.
Yeah.
If you see something that is alarming and out of ordinary, because I will tell you, I've worked with multiple clients who have had their identity stolen and someone filed a tax return on their behalf, basically. So then they had to wait like an entire year to be able to file their taxes. It's a mess. So you want to make sure any first sign of anything you see, you want to report it. You want to make sure you do something about it.
Yeah. So some systems offer, for example, the credit bureaus for a little amount, I believe, and that they offer that you can freeze your credit. So whenever you're gonna apply for a loan or something, you can always unfreeze it. They give you the opportunity to request a loan and then you freeze it again. So people that have been subject to identity theft, they go for that route. So this is a way to protect yourselves. And also it's for example, we're talking about Credit Karma earlier. If you go to Credit Karma, it tells you everything you have open. So if you have Credit Karma, you see something like, what the heck is that? So you know there's a problem. So you need to address that right away. Yeah, thank you, Jimmy.
Key takeaways and next steps.
Yes. Okay, so one, integrate savings into your budget. 70% of income, living expenses, 20% of income equals buffer fund, and 10% of income equals long-term savings. So this is the model that we were talking a little bit about earlier, to be able to have this model, to be able to have a little better budgeting. Yeah, exactly, the 70-20-10 model. Absolutely. And then save early to contribute more and earn a greater compound interest. Yes, this is very, very important too. Again, you guys are young. Do it now. Why wait? Maxed out 401k to take advantage of any match.
Yeah.
Like Brin was saying, whenever your employer offers that opportunity, take it right away because again, whatever you contribute is going to be matched, and then you're going to be able to have much more savings for sure. And then borrow responsibly to build your credit score. Again, don't just say, oh, I had the ability to get this credit card because I like Best Buy, or I have this opportunity to get this loan just because. Don't do it. Just do it if you really need it. Right? But you're gonna add something.
There's some questions that came through. Can you tell me what Seneca's was?
Of course. So Seneca asked, so if you freeze it, you still have the chance to increase your credit score, and then it's freezing just so other people don't commit identity theft?
Yes, exactly. Yeah.
That's exactly right.
And but say you are applying for a credit card or you're applying for that auto loan. If you freeze your credit with the bureaus, you need to call them to let them know, hey, I'm like, can you unfreeze this for 20 minutes because I'm about to do this application. They will work with you and do that. So that's the service that they have in place. And then Rosa, I think she had said
Rosa
something.
asked, does your 401k keep growing if you temporarily stop working due to unforeseen circumstances?
It does not. So that's why we have that rollover option. That's why you definitely want to look into that rollover option. Where can you move it so that it can keep growing? Because right now it's at a standstill, and whatever company you used to work for is just basically has that in their bubble, in their 401k area that's allocated to you, but you need to move that to keep it growing. It's at a standstill.
Seneca had a follow-up.
Yes.
Do you have to call in to freeze, or can you do it online?
I wish you could do it online. I think you still have to call
Yeah.
someday, hopefully soon.
Yeah.
She said thank you.
Yes, absolutely.
Great question, Seneca. Thank you.
Yeah, great question for us too.
Yeah, those were awesome.
Absolutely. Again, and keep your debt to income ratio below 35. This means
That's huge. Yeah, that's huge.
in order for you, whenever you have this, that means that you can borrow greater and better and faster and easier. Meaning like this, what this means basically, that the debt that you have, it doesn't surpass 35%. This is basically what it means. So just always try to keep it at 35%. whatever you owe and no more than that. Because that way the underwriters I was telling you about, they like to see that you don't owe too much. So that way they will hesitate a little bit more to give you more like a loan or any kind of credit, like a loan or credit or whatever, or installment loan or line of credit. They will just hesitate a little to give you a little more if you have your debt really high.
And these right here, these are some more educational workshops we have that go a little bit nitty grittier into that budgeting, that spending diet, the credit score reports and identity protection. So we can go deeper into them, but they're options. And then basically we are at our end.
Yeah. So these are, so again, this is my contact information. You would like to write it down, and that any questions that you may have or anything we can help you with, if you would like to start to be part of the PNC family, you're more than welcome to
Yes,
do so.
so we're at the Aspen Grove location, so we have not officially opened up our doors, but we will be. We're thinking actually next Thursday will be our soft opening. So if you guys are in the area, come on over. We're gonna have some cookies and stuff and light refreshments. But if you have any questions or you want to talk more so one-on-one with Veronica or myself, please feel free, give us a call Veronica, or you can even email Veronica. We'd be more than happy to talk to you. I also want to let you guys know, since you are students, we offer free student checking accounts. With this, it has no age limit. So you could be 60 years old and we can give you a student account at PNC. We believe that you are always going to be continuing your education. So if we can help you during this time, and that's the best way to do it, we absolutely can. You can be in a student account for 6 years. So say we open one up today, 6 years from now, you could still be in a student account. And most likely you're going to be in your job, comfortable getting direct deposit, because that's kind of how, sorry, this is so hard. That's kind of how it works with the accounts. Like however you get your direct deposit and whatever that pricing is, that's really kind of how you can get into those free types of accounts and get those different types of budgeting tools and online banking stuff that we do offer. So any questions at all, please feel free. Yeah.
You guys have different locations
Yes.
for ATMs and banks? And
Yeah, so in every 7-Eleven, there's a PNC ATM. Also, guys, on October 12th, which is Tuesday, there will be 40 PNCs here. Anywhere where there was a BBVA, there will be a PNC. So we are very accessible in the Denver market area. We are new to the area, but we are loving the community and we're really, really getting involved too. So also, if you have any type of community events or nonprofits or any type of networking types of things that you guys are involved in, please invite us. We would love to be part of it and get out there into the community. So hence why we're here at ACC with Jamie. We were so lucky to meet her, and we hope to be on ACC more often. So please use us whenever you can. And we're here. We also, PNC provides internships too. So if this is, if you're looking to get into the financial world, please check us out or even contact myself or Veronica. We can get you set up nicely.
Absolutely. Absolutely.
There was one other question
Yeah.
from Seneca.
Okay.
Sure.
Seneca, did you want to unmute again?
Yeah, I'm sorry if you hear my son peep a little bit, but I do have a question. Wait, can you hear me?
Yes.
Okay. So I had seen that you mentioned about the debt to income ratio, and that's kind of like the parameter is 35% or less. Is that what ideally like loan officers and lenders and I'm so sorry.
I have a 10-month-old, so
Yeah, he's 6 months. He's a little cranky right now, but we're working. So
This is the witching hour.
That parameter typically what loan officers and lenders like to see is 35% or less, or that's kind of like what you should just stay at, or like what
That's
is
what
that?
you want to strive for.
Okay.
Because one, you'll be comfortable living. Two,
Okay.
you will be able to have access to credit anytime you really want to, as long if you stay in that debt to income ratio. Of course, I mean, yeah, sometimes you're not going to be in that debt to income ratio, but don't panic because there are ways to get yourself down there. It's really it's a goal, and it's a goal to work at, you know, even if you're not at that 35%, but I would say it's a good standard to stay there, because one, your credit score will maintain the same, or if not, go up higher. Also, like I said, you would easily have access to credit at any location you ever would apply to. So
Yeah,
that's something that's huge, because being able to have access to credit is, you never know what might happen. And we talk about savings, but sometimes that's just not possible. But if you can keep a good, healthy credit history and like have a good, healthy credit appetite, you will at least be able to get yourself out of those pickles that you might happen to get into sometimes.
yeah, we have many different kind of loans to help you depending upon each other's situation. Like we can do loans against your home, for example. They have really, really reasonable interest rates, or we can do personal loans, whatever we can do. Again, we're a full financial institution. We have every single solution to help you guys in any way to be able to, if you have really high debt and you really want to lower it, again, we have all these kind of solutions for you that to be able to consolidate all that debt and pay much less and much less interest rate, for sure.
Rosa made a comment that there are no PNC banks in Castle Rock. Do you guys
No.
have plans to be in Castle Rock?
Oh my gosh, I live in Castle Rock and I keep telling my executives, we have to get one in Castle Rock. So yes, hopefully I'm pushing for it.
There are plans, Rosa.
Yes,
There are
I
plans.
live there as well. So yes, I hear you and I get you. I'll be pushing for that. The other one is in Castle
We just
Pines.
talked about that. It's so funny. Yeah.
Today we're talking about that. There's one in Castle Pines, the BBVA that is there in Castle Pines, that is going to convert next week into PNC, but that will be the closest to Castle Rock. But I'm telling you, I'm working on it. Absolutely. Any more questions, guys?
Is there any fees, like annual fee for a credit card with you guys?
No,
No?
we have 4 major credit cards.